Good morning, traders. Welcome to the Bookmap YouTube channel. My name is Charles. I come from a community called Piratetraders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. Thank you so much for joining me here this morning. Happy to have you. Happy Monday. All right, well, I'm going to go through and give my take on what is going on bigger picture with the market right now. I would describe this as a lot of uncertainty. The market on a longer time frame is just very, very messy right now. There is no clear indication from the market generated information exactly what to expect yet. Next. So what do I mean by market generated information? Well, there's two sort of ways that you can try to predict what is going to happen in markets in the future. One way is you can look at fundamental information, the actual data about companies and economies and so on and so forth, and you can try to picture how one thing will affect another and what prices will move based on that. The other is you can use technical analysis, which is what we call using market generated information. What is the difference between fundamental information and market generated information? Fundamental information requires a guess. You have to predict what the market is going to do based on, whatever information you have available. With technical analysis, we're kind of doing the same thing. We're predicting what's going to happen in the future, but we're using a statistical background to understand that. So we're saying this has a X statistical likelihood of going higher or lower at any given moment. So we're not just trading an assumption based on news-driven information. We are trading based on the charts. Well, in an environment like this, like the last few weeks has been with the new Trump presidency, where constantly things are changing, there's a new piece of information coming out every day, it makes using technicals much more difficult. It is much, much harder to look at a chart when things are totally random and chaotic and make sense of it than it is when things are pretty, normal and systematic and functioning the way they would. So as is to be expected, it's very, very hard to describe technically what's been happening over the last few weeks. It's really quite random. A lot of it doesn't make sense. One thing that has jumped out at me was last week we had multiple very large liquidations. We had them on Wednesday, Thursday, and Friday. Okay. Before Friday, every single liquidation break was getting bought up. Okay. That's an important signal. So what do I mean when I say the market had a liquidation break? Well, a liquidation break is when the market drops very rapidly out of nowhere and goes very, very far. So you all know what I'm talking about. You've seen these happen intraday. The market is trending higher and everything looks good, and out of nowhere it's like, and it just starts to break lower. That is a liquidation break. There is one of two things that can happen when the market has a liquidation break. Either it retraces the liquidation, or it liquidates and it gets new selling and it continues lower. Okay. Generally speaking, it's not 100% of the time, but generally speaking, intraday, if you have a liquidation break that retraces, it means in the days ahead, the market is going to continue higher because it means stronger hands stepped in and they will stay in those positions for multiple days and let the market go higher and higher and higher. And again, generally speaking, if you get a liquidation with new selling, it means you're going to probably take the market lower at least for another day or two because there is more desire to go short than long. So we got to get all those shorts in before the market can reverse and start going back up again. Okay. What we had last week was a bunch of liquidation breaks that retraced, but then we never got the follow through the next day. And then what we had on Friday was a liquidation break that had new money selling. But as you can see in the overnight, we did not get that continuation lower. So this is very tricky market. This is a market where things aren't functioning the way they are supposed to. And so this is a market that requires caution as day traders. It doesn't mean we can't take trades. We can absolutely take trades. And I'm going to walk you through some trades you could take today. But my point is we can't think of the market like we understand what's happening over the next few weeks, over the next few months. The truth is the reason we're getting these intraday moves the way that we're getting them is because no one knows what's going to happen over the next few weeks and over the next few months. That's the problem. That's why we keep getting these choppy, weird days, is because no one has any conviction either direction. Nobody's convinced the market is going to sell off. Nobody's convinced we're going to make higher highs. Okay. So intraday, I am going to be like water. I am just going to adjust to whatever the market is giving me minute by minute. And if everything seems bullish and it seems like the market is going to go higher and then we get a liquidation break and we start getting new selling, I'm not even going to hesitate. I'm just going to get short with that new selling because I'm going to assume things are constantly changing. Okay. So this morning, what am I looking at here in the charts? What are the levels where I'm thinking, okay, here's a level where I can do business and look for trades. So we have not established what the overnight range is yet because we're still in it. We got another 20 minutes of trade before the market opens. So whatever is the overnight high at the time the opening bell rings, let's just say for the sake of, explaining, let's say this is the high, 60.88. Okay. The current high. When the market opens, if it is able to get up above what is the overnight high at that time, and it is able to come back down and turn that into support, that is bullish to me. That is a reason to go long. Okay. So the market gets above the overnight high and gets new buying and gets support up there. That is a reason to go long. The target on that move, if you're looking for a very short little trade, would be this cumulative node right here around 60.98. The larger move, which has a good probability of filling, is 61.07. So again, if the market opens, it pushes above the overnight high and it gets new buying, we turn it into support. When I see that support, I can go long for a move to 61.07. I would take profits there. Now, does it mean the market can't keep going straight up? Of course it can. But with these choppy markets being the way they are, and the fact that every attempt we've made to get above 6,100 seems to instantly get sold right back down, I don't want to be long above there, right? So the first move is from the overnight high to the base of those single prints, taking profits there. Now, at that point, we're doing something called monitoring for continuation to the upside. What does that mean? It means if we get up there and we get new buying up there, I can get into a new long to target the next move, which would be to Friday's high around 61.24. Okay. So first see support at the overnight high, target a move to 61.06, take profits there. If we get new buying, get in another trade and take the move to the overnight high, the previous day's high, Friday's high, and then same exact thing there, right? Take profits. If we get new buying, look to get into another trade for that next move to the upside, which would be 61.48. I do not believe that's going to happen today. I do not believe we're going to go up to 61.48. I think the best we will probably do to the upside is get to the base of these single prints. I have a feeling the market will run out of steam there and turn around and come back down. Okay. So that is momentum up intraday today if we get momentum up. So what about if the market opens and it starts to go down? Well, I see the area between this large node from the overnight. You can see the market spent a lot of time and a lot of volume in here over the weekend. It was also an area where we spent a lot of time and brought in a lot of volume on Friday. And it is also a large cumulative node over the past few months. We've been just doing a lot of business around 60.65 over and over and over again. The market keeps finding support or resistance there. So if the market opens and it starts to sell off and it starts to go down, my assumption is it is going to find support in here and then turn around and start going back up. So between the overnight high and this node right here is what I call a chop zone. This is an area where it will be hard to know what's going to happen outside of this area. It will be hard to know, even if the market goes down to here, that it's going to keep going. We just don't have a clue. And it's hard to know, even if the market finds support here and turns around and starts coming back up, that it'll be able to get above the overnight high. We just don't know. So it's uncertainty. It's chop. So while the market is in between those two, I'm just going to let them chop. I'm going to let them grind. I'm going to let them do whatever they're going to do. Okay. You already know how I will handle it if they get above the overnight high. All right. Well, let's say they get through this node right here, right? They start to push down below 60.60. Well, then I'm asking myself, is it going to be what we call a look below and fail, where it turns around and comes right back up? Or do we get new selling down here? So once again, with the long, I have to see the market get above the overnight high. I have to see the support up there, trust that we have new buying before I get long for the move to the single prints. I would need to see new selling down here, okay? Somewhere below this node. If we get new selling below 60.60, I'm going to assume that the market needs to head down to Friday's low down here. Okay. So again, you could be more conservative with it and you could use this volume node right here if you didn't have as much confidence that it could make it all the way down to the previous day's low. But new selling below here targets a move in my mind to get to yesterday's low, Friday's low. Now, exactly the same as I said with the base of the single prints from Friday, I don't necessarily know it's going to keep going once it gets down there. Look what happened in the overnight. It got down there and instantly reversed and came right back up. So there's a very real chance that that could happen again today. We could get a look below and fail of the previous day's low. So if I was short, targeting a move from here down to here, I'd be taking profits here. Now, same as I said with the base of the single prints up here, if the market gets new selling, we get more resistance and the market is looking to go lower there, great. I can always get in another trade and target the next move to the downside. That's what we call monitoring for continuation to the downside. My assumption right now, based purely off of the information that's available to me, is I think the market is going to spend the next few days inside this range that we've been in for the last few days. Okay. I think the market needs a catalyst. It needs some sort of non-market generated thing, some sort of thing in the world to happen to change people's minds. Right now, they are not bullish or bearish. They're uncertain, and they need to be given some certainty. They need to be given some confidence that they can trust this market or that they shouldn't trust this market, right? They need to feel some sort of confidence. To me, if I'm thinking about it for this week, we got CPI and Powell testifying on Wednesday. That will probably be the day where people will make decisions about whatever the next big move is going to happen. Okay. So am I sitting here saying that the market has to go sideways for the next 2 days? Absolutely not. That's what monitoring for continuation is. If the market opens today and it gets to its new highs and it keeps getting support and it keeps going, I will keep getting in long trades. I'm not going to fight it just because I think we're staying stuck in this range for the next 2 days. I'll be happy to go long with the momentum. I'll just be taking it one little bite at a time and not assuming it's going to make some huge move. Same thing to the downside, right? I'd be happy to go short and take profits and go short and take profits and go short and take profits, right? Rather than assuming it's going to have some massive sell-off. Because to me, the higher probability is a couple more days inside this range, okay? Where we just keep doing what we did over the last few days. Lots of short covering rallies, boom, 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 that completely retrace. Lots of liquidation breaks, boom, 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 that completely retrace. Lots of reversals at previous levels. Look at what was happening last week. We had reversal here, reversal here, reversal here, reversal here, right? Reversal here, reversal here, reversal here, reversal here. So we are seeing that the market is in balance in this range. It is likely to stay in balance as long as it has to get that catalyst. Any questions on any of that from the chat? If you have not, smash that thumbs up button. Please do so. Really helps out the channel. Bookmap is creating this content for you. The least you can do is give them a thumbs up to say thanks. Jolly good old boy. We appreciate you. That's all the thumbs up is. And it's free. It doesn't cost you a thing. Good morning to Jay. Traders, it's another day in trading paradise. DNK in the house. Good morning to you. Will is here. Trevor, welcome, welcome. Kevin in the house. Good morning. Jared says, thumbs up. Appreciate you, brother. RJ says, victory flag. I'm not sure how I earned that, but thank you. Victory lap. SC is here. Good morning to you. And Alexander says, waiting for the next Trump speech. Yes, well, I think that's basically it. We're all waiting for the next crazy thing he's going to say to have the market react to it. Percy, good morning to you. Welcome. Everyone's favorite question, what is your volume profile range? So there's 3 different ways I think about volume profile. The first is the current 30-minute profile. Like literally right this minute, what is the market doing? Where is the volume? There is also the daily range, right? So over a day, where was the volume? So you can see right here, this represents Friday. So you can see the volume profiles showing where the market traded on Friday, right? Where were those larger volume profiles? The one you see over here to the left is the cumulative profile. There's not any exact number that you need to have there. It's people always ask us like, what do you do? 2 months out, 3 months out, whatever. I don't think about it like that. I just think about how far back do I have to go to see when the market traded in this price level before and know how many contracts traded. So if you start by looking at the daily, you can see right now, you just need to go back to December, right? Because there was no trading up here before December. So you don't need to go any further back than that. But let's say the market were to have a massive sell-off and it were to come down to here, to 57.80, right? Well, then I'd have to go all the way back to November to find when we traded in this range before. And if we kept selling off, I'd have to go back as far as September to know what happened when we were in here, right? So it's just how far back, time-wise, do you have to go to see what the market did at this price level? That's the way I think about it. And I genuinely don't spend any time worrying about it at all. Any other questions? All right, let's take a quick look at the NQ. I mean, suffice to say, it's basically in the exact same position as the ES. Both markets are just bathed in uncertainty right now, bathed in confusion. Oh, man. Yeah, I would, bigger picture, I would describe it exactly the same as the ES. As far as intraday levels today go, so chop zone between 21,795 and 21,660. Okay, that's your chop zone where your uncertainty is. If you break 660 and you get new selling, the first target to the downside is the backfilling of the single prints. Or sorry, actually it's Friday's low at 21,550. And then if you get new selling there, the target is the overnight low, 21,428. Okay. If you get above the overnight high and you get new buying, the first target to the upside is backfilling the single prints to 21,875. With new buying there, the target is a move to yesterday's high around 21,975. So it's like identical to the ES. It's literally identical. So it's a slightly smaller range, but it is the same conceptual idea. Chop in between here. New buying up here, targets a move to here. New buying up there, targets a move to there. New buying up there, targets continuation. New selling down here, targets a move to here. New selling down there, targets a move to there. And in the middle, I do not recommend one diddles. I'm talking about a chop zone on the daily. Leon says, "What's up, Captain?" I'm doing good, Leon. How are you? Griff says, "Weekly balance, as it seems." Yep. Balance everywhere. Balance on the monthly, balance on the weekly, balance on the daily. We have a market that is definitely in balance. Trader in the Bookmap Discord, good morning to you. For those of you that are watching in the Discord, if you want to comment or interact with me, just go up a little bit. You'll see a tab that says Futures Charles. Just click on that. You can write in a comment and then jump back to watching the live stream again, and I will get to your comments as soon as I can. We got 6 minutes till the market opens. Any questions? No questions. Well, if you don't have a question, you should give me a thumbs up for doing such a good job of explaining things. That's the logic. It works, right? It makes sense. Nova says, "What is your bias for today? Is there any?" And the answer is absolutely none. None whatsoever. So I could make a case for the market going lower today because of what happened on Friday. Because we got the B-shaped profile, we had two different liquidations, both that got new selling. That is very bearish. But then look what happened over the weekend. Massive liquidation that completely retraced and started to build momentum up. We've turned this area into support and are trying to take the market higher. So you've just got opposite signals. Friday, the market was saying it wanted to go lower. And then Saturday and Sunday, the market is saying it wants to go higher. So it could go either way today. I'm completely neutral at the market open. And I see this area right here as a chop zone. So basically, when the market opens in 3 minutes, I'm not going to be taking bets anyway. I'm going to just watch. I'll just watch it go up and watch it go down and watch it go up. And I'll be paying attention to where is support and resistance, right, within the chop zone. So how much time do we spend inside the chop zone? Do we instantly break out or do we spend an hour in there first? All of these are pieces of information that I can use to build that narrative, to have that bias for the day. But right now, when the opening bell rings, I have no bias. I have to wait for the market to tell me what it's doing today. The closest thing to a bias that I have right now is the assumption that we're going to keep balancing for another couple days. I have a feeling we have to wait till Wednesday. Doesn't mean we have to. We always can start to make a move at any moment. But I just think right now, with the information available to me at this moment, I think we're going sideways for the next 2 days. And that could play out either way. It could play out with a day where we move up and then the next day we move down. It could play out with massive, volatility on both sides. It could play out where we start going down and then turn around and come back up. I mean, any of these outcomes are possible. So to me, there's nothing wrong with letting the market chop around in a, 50-point range, less than that even, a 40-point range, and just wait and see. Once it breaks out of there, that's where the higher probability trades are. Either getting above the overnight high and finding support where it's a long for continuation higher, or going above the overnight high and failing, and then it's a trade back down to the opposite end of the chop zone. Both of those trades are excellent probabilities of success, but we cannot know which it's going to be until we get there, and we see what happens when we get there. Do we get that new buying or do we not get that new buying, right? Same thing down here. Do we get the support in reverse or do we turn that support into resistance? That's the trade. In between those two, it's a guess. It's a gamble, and I don't gamble. I play statistical probabilities. 1 minute to market open. Ray says, so the market gets to those outside of the ranges you're talking about. Do you wait for entries based on what Bookmap Orderflow gives you? It's a good question. Orderflow plays a part in it, but the most important decision for me will be volume, just overall volume. If we get above here and the volume tapers off, the market is likely to turn around and go lower. If we get up here and we get new volume building, the market is likely to go higher. As far as what I look for on Bookmap is what's happening to Bookmap when I get there. So when the market gets up there, obviously there will always be liquidity sitting at these levels before the market gets there, but does it spoof? Does it just disappear the second the market gets there, or does it actually hold as resistance? And then based on what I see happen in the order flow, I know what comes next. If it disappears, the market probably turns around and comes back down. If it's resistance, the market probably pokes and pokes and pokes at it. And then we got to wait and see when we poke through. Beautiful handwriting, writing with the mouse. So this is the chop zone. I will point out some support and resistance levels within here, and we will watch what happens when we get to those. Leon says, how do you see Tesla? How do I see Tesla? Let's take a look. The last time I looked, it was a disgusting looking chart. Yeah. So they are pushing into a previous balance area right now. So this area right here is what we call a balance area. You can see what happened when they finally broke out of that balance to the upside. That gave us that big move of momentum. So they tried to bounce off that move using time, and they couldn't do it. So then they tried using price with a smaller dip, couldn't do it. So now they're doing price with a bigger dip. So I would say today is an area where the Tesla could find support to reverse up and out of here. If they don't, then they will instantly rotate down to the lower end of balance. And that looks like it's as far as 330 a share. So they got to find support. Yeah, they got to turn 347 into support and hold that, or they're heading down to, at least 330, if not even 310. But there is a very real chance they could turn that into support. So it looks like they opened with a gap down. So you have momentum down intraday today. So if that momentum down reverses, can they fill the gap? If that gap fills, can they spend time and bring in volume inside the previous day's range? If you get all those things, a reversal from here, a gap fill, and new buying inside of yesterday's range, you could look for a move back up towards yesterday's highs as a bounce off of this balance area. Boop, boop. But for now, the momentum is down, so you'll have to wait and see. Nova says, how do you know when price comes up to a liquidity point if it is going to use it as resistance or reverse, or if it's going to go through the liquidity? How do you predict that? Well, one way you can kind of predict it is based on what's been happening throughout the day. So if throughout the day so far, obviously we're very early on in today, so we don't really have any examples, but if throughout the day, the market's been spoofing a lot, meaning it's been layering in orders at a certain level, and then when the market gets there, they disappear. They don't actually fill. They just poof. They just disappear. If that keeps happening over and over again, you should be assuming it's going to keep happening. You should also be observing on that day, in that time, what happens when that spoof takes place. Does that cause the market to, let's say there was liquidity below and it spoofed as price got to it. Did it cause the market to liquidate lower? Or did the market reverse and come back up to whatever the large node of liquidity is above? If you get the reversal, that's going to keep happening throughout the rest of the day. If you get the liquidation, that's going to keep happening throughout the rest of the day. So it is really either can happen. You can have liquidity, the market can get right to it, it can disappear, and that can cause the market to sell off even more, or it can cause the market to reverse. It's really about momentum. So if the market has momentum and they spoof the liquidity in the direction of the momentum, it'll just keep going. So again, just to create a hypothetical, let's say we had momentum up on the daily. We don't, we're in balance, but let's say we had momentum up on the daily and the market were to work its way up here towards this liquidity at 60.85, right? And then the market were to spoof that and pull it right at the moment it's about to get there. Then you should assume this thing is going to keep going. Okay. That liquidity was there to keep that momentum going. Okay. So if we don't have momentum, if we have balance, which is what we have here today, and they spoof it, what is likely to happen? The market's going to come right back down. Because when there isn't, an agreement amongst participants that the market is going to go up or down, when it's two-sided like this, the longs are only targeting a move to that liquidity. So as soon as it disappears, so do the longs, because that's what they were targeting. Whereas when you have momentum, when a market is moving in a certain direction and a majority of participants are in agreement that the market is going to move in that direction. All right, hold on real quick. First potential support for the market right here around 60.71. If we get a bounce, we assume more chop and it is slightly more bullish. If we continue to sell here, it is more bearish, but still in a chop zone. Okay. So yeah, when you have momentum and that spoofs, then anybody who had been selling suddenly freaks out and they get squeezed and the market continues higher. So nothing is, if you're looking for things in the market that are as simple as like, this always happens this certain way, you're going to go nuts because the market is random. So you have to always have scenarios for any possibility of what could happen. And then you just observe what's happening. The better you get at that, at observing what is the market doing right now at this exact moment, the better you get at predicting what it'll do next. And just for what it's worth, the Bookmap liquidity-wise looks identical to me as it did last week on, say, Wednesday, Thursday, Friday of last week. So that tells me I observed it last week. I observed a certain look and a certain behavior, and a certain thing happened, which was the market stayed in a zone with large V-shaped reversals both directions. So if I'm opening up my chart on Monday morning and I'm observing the same stuff, what do I think is going to happen? The same thing. I think today is going to be like, Wednesday and Thursday of last week. Thank you, Leon. Thank you, Nova. Any questions from anyone else? Well, we're stuck in a chop zone. In a chop zone. Sook in the house. Good morning to you. Leah says from the Discord, how do you determine imbalance on Bookmap? That's a great question. So imbalance, I don't really know is the right word to describe it. That I more use price action for. So like, where does price go and what happens when it gets there? We talked about the overnight high. That's a great spot, right? Where the market works its way up to that overnight high. Okay. And then we find out what the imbalance is when we get there, because either we get new buyers, which means we have momentum, we're going to keep going, or we don't. And guess what happens if we get to that overnight high and we come back down to test support and we don't have those new buyers? We turn around and come right back down. So that's the inflection point. That's the moment where we know, can this thing keep going or is it going to fail and pull back? And again, that's generally based on tempo and volume at those levels when we get there. What Bookmap can tell us is what games the market makers are playing, right? How they are trying to push the market around, and they're not paying attention to you. They're not coming for you. It's the other bots that they're coming for. It's them versus them. It's large players trying to take from one another. And because they're all using computers nowadays to trade, those computers have to use current liquidity as a mechanism for decision making within that trade. So if one computer comes in and puts a big note of liquidity here, that might convince another computer not to go short, right? Because it's like, oh, the market's going to reverse and come back up for that liquidity. So a lot of what you see in the order flow is BS. It's just market participants trying to trick one another into doing things. And so if you can recognize what is happening today, so today, for example, we have liquidity on both sides of the market, right? Just everywhere. Large node up here, large node up here, large node right here, large node down here. So this is the market wants to go sideways. It doesn't want to have a clear move in one direction or another. But if I saw tons of liquidity below and only one little liquidity above, guess what I would assume the market is trying to do? It's trying to go higher, right? They're trying to scare everyone away with all these buyers down here and get them to move up into whatever that liquidity is above. So again, it's all contextual. What's happening with the market today, that's how you read the book map. But for now, everything is screaming balance for today. So I still go back to my game plan from the market open. It is perfectly working out so far. All the information is confirming what I expected. Which is a chop zone where they will chop it up. So DNK says the ticks are bouncing at 69.70. Yeah, the ticks unable to get to the zero line tells us there are still longs from the overnight in the market, which tells us we probably need one more poke to the downside to squeeze the very last longs we can squeeze. Then the market can go up. Okay. So I would say they're trying to reverse the market back up right now. Why would I say that? I'm looking at liquidity. Look at how the liquidity is fading away above price up here as we progress through time. And look at the way we're adding liquidity down here. So at the same time that it's getting thinner and thinner above, think less and less resistance above, we're getting more and more support below. So the market participants are trying to get this market to turn around and go back up right now. That's what Bookmap is telling me. Now, let's say something suddenly changes. Let's say one of these two just poof, disappears. Well, then guess what? It's going to come down, right? Or let's say they start to pile up a bunch of liquidity above. Pile, 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 pile. Out of nowhere, it gets dark red. Same thing. It's going to turn around and come back down. These changes happen second by second in a fraction of a second. Because again, it's computers communicating with other computers at the speed of light. Or at the speed of waveforms. It's crazy how fast these high frequency traders are. They're so fast. First, they put wires that wired them directly into the exchanges. Okay. So that they could have access. And that wasn't fast enough. So then they started to build inside the exchanges so they could be in the same building. Now what they do is they send signals from their building to the exchange through satellites because information can move faster through the air than it can through a cable. So now they're using satellite dishes to take trades in frequencies of a second. It's crazy. It's absolutely nuts. But we can watch it happen as the liquidity changes fraction of a second by fraction of a second. We can see that they're changing the games they play. So what happened? I just talked about they're trying to reverse and go back up. Look what happened. Liquidity faded off here, built up here, price stopped going down and turned around to start going up. But now what are they starting to do? Now they're starting to pull liquidity from down here and add it up here. So now they're trying to, and I don't mean right this second. I just mean they want to push it up a little bit and then turn around and send it back down and then turn around and send it back up. They're trying to keep us in a chop zone. Those sons of guns. RK says, what's your filter on Bookmap? I see a ton. I have all my Bookmap settings in the Discord. I don't think I have any particular filter for volume. Cutoff at 50. Upper cutoff at like 95. That's the way I have mine set up. My guess is that's the default, how they come. Or I may have tweaked them one day and just kind of played with it to get it visually where I want it. Rando says, the way I understand it, price wants to go towards liquidity like a magnet. What you are describing seems to be the opposite. Yes, sir. I have found it to be both. Liquidity can work as a magnet to pull price to it. Liquidity can also work as a magnet to push price away from it. And if you're trying to figure out which it is, just look at what's been happening. So you can see here, earlier this morning, The market was going down, right? Then it started to turn around and come back up. And then what did they do? They piled in a bunch of liquidity above price. Okay. What happened when they started to add that liquidity up there? It scared price away. It pushed it in the opposite direction. Then what happened? We started to add more liquidity down here. And what did that do? Scared price away the opposite direction. Now we're adding liquidity back up over here. And what is it doing? Scaring us back down that direction. So again, you just have to observe which of these things is happening and then assume it's going to keep happening. When a market is in balance, it functions differently than when a market has momentum. When the market has momentum, yes, those will often act to pull. So let's say we had momentum down right now. These would be a target for the market to move to because we have momentum in that direction. But we don't have momentum right now. We have balance. So it's working the opposite. The more and more experience I gain as a trader, the more and more I begin to understand context is the most important thing. Whoops. Context is the most important thing for understanding trading. Okay. It's not the information in and of itself that is valuable. That is actually quite random. It is the information in context of understanding on this day at this time, what is this information telling me? And the best way to get that answer is just to see what's been happening in the recent past. Now, the market is always changing, so these things will change, but then you recognize a change and you start seeing it in the new way. And then it changes again and you start seeing it in that way. And you'll never know when those changes are going to happen ahead of time. You won't always be right, but you'll be right more than you will be wrong, which is the goal in trading. Okay, so now they're trying to push the market down, but what are they doing? Right now, at this moment, they're starting to pull that liquidity above. So guess what market's probably about to do? Oh, no, they added it right back again. Okay, they do want that one more poke to the downside. Sorek says, I see it the way I see it based on experience and chart time. Correct. My trick to learning how to trade is I don't take what other people tell me and assume it is right. I watch the chart myself day in and day out and come to my own conclusions. And looking at it that way, I have found liquidity can act as a positive magnet, pulling price to it, or a negative magnet, pushing price away from it. It can function both ways. And as I said, the best way to know which is what it's been doing prior to that. And you have to accept, as I said, that these things change in a fraction of a second. And so you'll be like, ooh, I see this and it's telling me that. And you're like, oh, fuck, it changed. Now it's telling me that. Oh, fuck, it changed. And that's like, if you want to look at order flow, that's what you got to do. You got to be willing to change quickly. Because every second, some new computer is doing something new. Okay, so what just happened to the liquidity above? Poof! It just disappeared. Let me zoom out and just see if they moved it up higher. Nope, they fully disappeared it. So you see that? At the moment that they disappeared this up here, what did they start to do? Add more down here. They're trying to scare the market away. They're using the liquidity to push, not pull. The market is going up to the spot with less liquidity and away from the spot with more. Oh my God, Charles, but it's supposed to be a magnet. It's not a magnet, guys. It's a game. It's one computer trying to fool another computer. Oh, it looks like I did have a filter on, the order change filter, OCF. Also, I'm on the Tradermap Pro. I should have mentioned that as well. So the regular chart looks very different because it has all those market maker bots. Very hard to read the liquidity there. DNK says he thinks we're going to get a test of Friday's low. I do still think it's too early to say. I assume you're looking at NQ. Let's take a look. Yeah, way too early to say. NQ got above the overnight high. So this is that moment of truth. Either they're going to bring in buyers up here and keep that momentum going to backfill the single prints to 21,880. Or they're going to fail, come back through the opening price and probably head down to 21, 700s down here. Moment of truth for the Q. But I would say neither market looks like it's heading for Friday's lows. Not yet. Still in a chop zone. And that's the thing about a chop zone. I don't think anyone actually knows which way the market's going to break today. They're all making bets. And what's going to happen is one side is going to be bigger than the other, and that's the side that's going to break. Tom Gunn says, son of a gun, we'll have some fun on the bayou. I don't understand the reference, but I love a bayou. Some crawdads. Get down and get some crawdads. Okay, so can anyone tell me, purely talking about Bookmap, purely talking about the liquidity, what would be a change that might tell us the market is ready to turn around and start heading back down? Come on, chat. You got the answer to this. Hello? Is this thing on? Come on, chat. We've been talking about it all morning. What's going to be the change in Bookmap that's going to tell us the market's ready to turn around and head down? There it is. Sorex got it. When suddenly you start to see they're creating a big yellow spot above somewhere, and these start to disappear. These start to fade off the same way they faded in here. If they start to fade off, coming back down. Going downtown, but not yet. River Rock says, what is the halfway mark? It's actually a great time to bring it up. That is what we call the halfback. So the halfback is simply 50% between the high and the low. It's literally half the range. And the halfback is a potential support or resistance level for the market. Generally, most of the time, it's not that important. We don't pay a lot of attention to it. But in chop zones, like right now, at this moment, it is much more important. When the market can't figure out if it wants to break higher or break lower, and it's just chopping and chopping and chopping, oftentimes, before it finally does make that move one way or another, it will first turn that halfback into support or resistance. So like hypothetically, if we were to get smacked down right now at the halfback, it would mean we have a higher probability of breaking the chop zone low and at least trying to take the market lower. This does not count as that because we got a few points past it. So getting through the halfback tells us more chop. It tells us the market hasn't picked a direction yet. No one's in charge here, see? Oh, look at that. Wouldn't you know? What's happening, guys? They're starting to pull liquidity from below. At the same time, they're starting to add it above. It's like clockwork. All of this is screaming balance to me. Balance, Charles. We're saying balance, Charles. Nova says, why do you use ES instead of NQ? Do you think NQ is too erratic? Yes, I do. Too many reversals too quickly and too large of ranges. So the thing about the NQ is if you don't nail the timing on your entry, you're fucked. This is the way I trade with my approach to trading, because either you get in the trade too early and then you probably get swept up at some point, right? They probably just, make a quick move and take you out and then make the bigger move they're going to make. And if you get in the move too late, you're chasing and then you miss out on the move. So it's like you have to perfectly time your entries. Not too early, not too late. Whereas ES, it tends to give you a lot more time to kind of watch a level become support multiple times before it makes that big move. It literally just gives you more time to make a decision. Whereas with NQ, you have to make your decisions very, very fast. And you have to be able to change very, very fast. So I like that the ES is a little slower and more methodical. That being said, sometimes there are days where the ES is in a super tight range and it's super boring. And then I wished I was trading the NQ where at least I could have gotten a larger range. But what I found does not work is switching back and forth between the two, which I know a lot of people do that. They trade ES one day, NQ the next day, Russell the next day, blah, blah, blah. I found no success in doing that. I have found if I just pick one chart and I just stare at that one chart all day, every day, I can get very good with that chart. But the more like switching back and forth I do, the more confused my brain becomes. An analogy would be you're trying to learn how to drive a car, and one day you're driving a manual, and one day you're driving a stick shift, one day you're driving a pickup truck, the next day you're driving a little Kia, Rio. It's like you keep switching. It's harder to learn than to just drive one car every day and get used to driving. Then you can start to switch to different cars, and it's easier. Okay, so as of now, I'm leaning a little bit more bullish. Passing through the opening price is a potential area. Doesn't mean it's guaranteed to happen, but it is a potential area where you start to get short covering. Okay, what is short covering? It means people that were bearish down here near the lows, people that were going short, we'll say 70, 74, this area in here, right? They've probably got their stops up here, right? They've got their stops starting at above the opening price. So if the market comes through the opening price right now, that gives us information to carry forward. We are likely to get some little pops to the upside. So it'll go like boop, 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 and it'll kind of pop up very quickly. As it's doing that, it's taking out all those stops. So then the question becomes, what comes next? If we can take out those stops, boop, 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 come back down and find support, I would be thinking there's a significantly higher probability that the market wants to go higher today. If we take out those stops, boop, 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 and then reverse right back down through the opening price again, more chop, more sideways, more grind. So here we go. We should start to get those little pops right now. Okay, boop, boop. So we just took out all those sellers who were selling the low. So now the question is, can we bring in new buyers above the opening price? Can we turn this into support? We also just created a weak high, increasing the odds we're going to get above the overnight high. Okay, so now we are at that moment of truth for the ES. We got to the overnight high. As we discussed this morning, there's only one of two things that can happen today. Either they turn this into support and they keep going higher, or they can't turn it into support, in which case they're going to turn around and come back down towards 60, 65, this node down here. So this is our moment of truth. Can the buyers keep this momentum going, or are they going to fail? It's a terrible time to have to switch live streams. I'm stepping on Bruce's time here. I thought I'd be able to give a signal for the day before we got to the end of the hour. So what's happening with liquidity? Less and less below, more and more above. So it does feel like they want a look above and fail today of this overnight high. I suspect we're going to get at least one more poke to the upside before we do. Okay, guys. Well, it's too early to officially make this call, but I believe this is going to be a look above and fail and come back down into the range. They may get a little bit of a push up towards the 69 area, or sorry, 96 area. But I still think it's going to turn around and come back down. This to me doesn't feel like real new buying at the overnight high. So I suspect we're going sideways for a while longer. With that, I will say goodbye. I appreciate you all watching. If you have not hit the thumbs up yet, why the heck not? Just give me that like. I earned it. And if you enjoyed what you watched today, consider joining the brigade. You can see there's a link at the top of the screen. Piratetraders.io/join will get you in the brigade, $20 a month. You get to see these live streams every single day. You get to see my levels of interest every single day. You get an email from me telling you my bias first thing in the morning every single day. If you're interested in that, sign up. It's free for the first 3 days, so why not give it a try? Thank you very much, and we will see you next Monday. Members of the brigade, give me about 3 minutes, and I will see you in the live stream.